Yo, as we can see, I have already marked all of the trades that I've taken, so we will go through it day after day, one after one. We will go after it. So also, this break of structure that you can see right here was our previous weekly low right here, which is not a break of structure now because it was swept through the week when I was back testing. Now I'm making the video, so now you will see that as a break of structure. But let me show you why I took the trade and how I took the trade. So I'll show you the 1 hour and we'll go on the 15 for confirmation. Okay, so now we open Monday. My bias was clearly bearish on GBP USD. Why? Because of DXY was clearly showing bullish. So, and also EU, I compared it with EU, then EU was also showing bearish. Even if DXY and EU are correlating very nicely, we can also anticipate GBP USD to go with them. That's a very good sign, or that's a very good thing to know, so that we can take the trades only with the bias, with the higher time frame. And now if I show you the trades on the hourly, we were waiting for Monday to sell this market. Why were we waiting for this sell? And I was looking for sales from this hourly supply zone. This was the hourly supply zone which was created. This was the break of structure, or you can also argue that this is the change of character. This was the change of character on hourly, but I didn't mark it because I thought that after seeing this Asian range, this supply zone is so far away, so I didn't anticipate it to that supply zone to get hit anyway. So I took the trade based on liquidity sweep, and I will show you why I took it. If I go to the M15, you can see Friday literally went up, gave us there was huge liquidity here. Why there was huge liquidity? I'll show you. There's a consolidation going on right here, right? So obviously there will be sellers right here. There will be stop loss of sellers right here, huge amount of selling pressure, and there will be stop loss of buyers right here. As we can see, the Asian range has already taken the buyer stop losses, so the price has higher probability. And our higher time frame, the main thing is the higher time frame, right? Our higher time frame bias was bearish, and the price came up all the way up, swept this liquidity which I anticipated, and I didn't anticipate it, this hourly supply to get hit anyway, because this was so far away, and this supply zone was made on Thursday, right? And we are taking the trade on Monday. So if you are taking a trade on Monday, the supply zone from Friday makes sense, but Thursday it's a bit far away to go up and come down all the way. So I marked this liquidity sweep as my bias was so strong, and I took the trade. And what happened was we lost the trade. Part of the game, no problem. Our bias was correct, our bias was not wrong. As you can see, the move did end up happening, but what we did wrong was we took the trade very early, or this is just a loss of the strategy, bro. You can't do nothing at this. You have to accept losses are part of the game, and you have to be able to deal with losses. That's what a professional trader does. Whenever he lost, he doesn't care about it, or he learned from it, but he knows that losses are part of the game and we can't avoid it. So now let me quickly show you the bias for Tuesday. And then we'll continue. My bias for Tuesday, if we see the GBP USD, my bias is clearly bullish because this candle is a bullish pin bar, or you can see a doji with buyers winning the day. The buyers won this day, right? The price literally went down and up, so it's a bullish pin bar. So for confirming our bias, we go to DXY, and on DXY also ask yourself, DXY closed as a bullish candle, and even GBP USD closed as a bullish candle. They are supposed to be the most ideal situation is them doing opposite things, right? But in this case, they are doing the same thing, so it doesn't make sense. You either don't trade this day, or we go to Euro USD, and Euro USD clearly showing huge selling pressure. So from there I confirm my bias that I'm looking for sales, even though this closed like this. And now we go all the way down right there looking for sales, and I marked this supply zone because this was the move that caused this break of structure here on the hourly, and my bias was also bearish, so I was looking for sales. If I show you, the Asian range closed something like that, and there was also CPI, I guess. There was news, not sure, let me check. Yeah, there was news on Tuesday on 11:30, which was unemployment change. If I show you on the calendar factory, there was news. So it was not an ideal day to trade, but even though we were looking for sells right there. And if I go to the 15, I literally took this trade from this exact supply zone that I marked, but this was news. So the news came up, swept this liquidity from all the sellers that sold on Monday. The huge move happened from this area right here, right? So huge liquidity right here, swept the liquidity from all the sellers, and then we entered the market with a 10 pip stop loss. It did give us the move. This was a break-even trade. It was, our TP didn't got hit here, so we considered this as a losing trade right here. And now we go to the Wednesday. We are checking Wednesday's bias. Let's see. Wednesday, we can clearly see here, this is a bearish pin bar, or you can say a kind of bearish pin bar, not a bear. It didn't close a bearish candle, but even though the buyers pushed the market up, sellers came back. That is exactly what we need to know to decide our bias. And also DXY was aligning. It was giving a bullish pin bar, so it didn't make sense for me to take buys on GBP USD. So I was again looking for sells, and even Euro USD was going down, so it gave our bias even more consideration. And if I go to the 4 hourly, I can show you how I check the price action on the 4 hourly, but if I do that, the video will be so long. I know I do that, yeah, and to be honest, yeah, but for now let's just bear with it. And yeah, so now if I show you Wednesday, my bias is still bearish on GBP USD. So Wednesday the price opened here, there was no clear supply zones to trade from, and also on Wednesday there was news, CPI news. You can see GBP CPI news, so not an ideal day to trade. So the London session I was clearly not trading. And if I show you what happened on CPI, was CPI tends to go on one direction, and exactly that happened. After CPI came out on 11:30, literally the market went up, changed character to the upside on the hourly, I guess. Yeah, changed character to the upside on the hourly. So Wednesday was a no trade day for us. And now let's check the bias for Thursday then. Thursday, we can clearly see the bulls were the king. On Wednesday, the bulls were so strong on the market. Now we go to DXY to compare. Even on DXY, the bulls are so strong here. So it didn't make sense. Both are doing the same thing. So what we do, we go to Euro USD to confirm the bias. And Euro USD was going down. So obviously we are looking for sells again. Even though the candle is so bullish, I'm still looking for sells, just because I know how to compare, how to correlate between the pairs. That's very, very important, and that's gonna help you a lot. So Wednesday was a no trade day for me. I didn't took the trade on Wednesday because of what the price action was looking like, and there was news, high impact news, also CPI and FOMC meeting, which we don't care about, to be honest, because it was so late on the day. But even though it was good not to trade after CPI. So Thursday was unemployment claim 6 p.m. so we can easily trade London session on Thursday. So we wait for Thursday to open. So I mark this M15 supply. I will show you this trade. Let's wait for the Asian range to close, and then I'll show you why I took the trade exactly. Look at here. On Thursday, there was no clear supply zones, to be honest, because this low here caused this high, so there was a demand zone. But my bias is bearish. I'm looking for sells. So for looking for sells, I need to look for supply zones. So this supply zone is not a valid supply zone because no break of structure, no market structure shift. So either you don't trade this day, or what we can do is we go to the lower time frame like M15. What on 1 hour was one move. Now on M15, that's a higher high, higher low, higher high, higher low, higher high. And now here, this was the most closest supply zone after the Asian range. As we know, the Asian range decides the zones we trade. So now we spot this supply zone on the M15, but this was a weak supply zone. Why? Because this was, first of all, this is the M15 supply zone, and on the hourly it's not making sense. On the 4 hourly it's not making sense, but on M15 it was making sense because you can argue that it broke structure here, somewhere around here to the downside. So there was a market structure shift. There was a huge fair value gap here to fill Asian high liquidity sweep. So it made sense to trade, to be honest, on Thursday. And my overall higher time frame bias was bearish, which is the most important thing. So we took the trade. We didn't took the trade here because this was not the reaction we are looking for. And so what we did was we have drawn the, as I cannot backtest the M5 and M1, I took the trade on M15. Draw literally the OTE entry that we know. We marked the Fibonacci retracement from the high to the low and took the entry at this level right there To be honest, I could have taken a very sniper entry if I was so confident in my bias. And this trade did play out on Thursday. It was a winning trade. But yeah, one more thing to learn on Thursday was our bias was bearish, but it was not correlating with DXY, right? So anytime anything can happen in the market, as we know. So once we take our profit, like once our strategy is the Asian low right here. So if you became greedy and you have targeted all the way down here Asian low from Wednesday, you would have lost this trade. So if you weren't greedy, then you would have won this trade. That's very important. And now on Friday, the last day of the week, Friday is usually the reversal day, as we know, as the whole week went up, so we can anticipate the week to go down. This was not one of the best market conditions, as there is wicks up and down right here. It's not trending very nicely. So we go to DXY to confirm our bias. Literally DXY was giving a bullish pin bar, so didn't make sense to sell again. So again my bias was bullish, targeting this draw of liquidity. But this, as we know, Friday is a reversal day, so we also have in mind that a quick profits or quick trade in our time, if we get it, and we will take the profits, because it's not the best trades. And so now on GBP USD I'm looking for sells again, because of it's correlating with DXY and EU. When two things are telling you one thing, that not outworks the one thing. So I was looking for sells on Friday. So let's see what happens. Friday opened here, so on Friday I was looking for sells from a supply zone. So there was no clean supply zone. The Asian range closed. This the only supply zone, very weak supply zone on the 15 would have been somewhere around here. If I had forced a trade, it would have been here. So, but I didn't want it to force the trade, so I didn't took it here. Now this is a continuation model that Sal doesn't teach us, but while backtesting, I have seen a gazillion of times happening, this move happening, and this move does works, as I've seen. Our bias was bearish, no problem. Huge selling pressure coming here. Friday there was no news on Forex Factory, but there was unemployment claims news on GBP, which moved the price to the downside, showing us that yeah, the sellers are present in the market, right? So now what we will do, we will mark this supply zone from where the huge move happened, and take the trade inside the Asian range, from the order block inside the Asian range. We don't do this often, but we have to adapt to the market conditions. So if the market is not giving us our edge, then we have to adapt some things. And literally the market came back perfectly to the supply zone, mitigated it, literally reversed it, exactly the reversal pattern we want to see, an evening star formation. And after seeing sellers kicking in the market with our bias, we took the trade for a 1:3. And also on the hourly time frame, you can see it was a huge weak rejection. This was a lower low, lower highs, lower lows, lower highs, a huge weak rejection, and then continue to the downside. If you are trading with a higher time frame bias, you can take the risk, but only after the price reaches to your marked points of interest. And my target for the day was previous daily low, which was hit, and it was a beautiful week where we could have caught so many potential trades. Not one of the best price actions as for the week, to be honest, as you can see here, but aligning it with DXY and Euro USD, it made it so easy. And I'm gonna apply the same thing on the live markets and see if it works or not.